Right, not sure if everything is working as it should, although I'm kind of back to my normal setup and I'm about to do a meeting with the members. And before I do, I wanted to take a couple of minutes real quick to go live and talk about today's price action. And everybody's going bananas. And I would say, guys, I mean, really keep it calm, be more adult like. Really, if we objectively look at what happened in the recent couple of days, so we had the price action right here around 6200, climbing up, especially most of the price action that we saw, and the reason for the price level that we got and reached to today was pre-market price action. So really we just opened up at this 6385.85 level. We are still retesting that diagonal level that I've been sort of saying that we will objectively behave around as if it is the ceiling's the trend's ceiling rather. I really can speak today, it seems. So as you can see, we are basically kind of moving within that wedge-like formation, overturning to the downside. As I was warning, we will see more of the market taking more than it's giving, even if it's giving, let's say, 100% whatever movement, let's say for every $100 the market gives, it's going to take 130, 140, 150. Basically, it's going to take everything it gave and then some. Objectively looking at the price action right now, we are looking bearish. For example, if we're looking at the 30 minutes, moving closer towards the end of the session, we are oversold right now, bearish. 45 minutes, as you can tell, given the 30 minutes, we're moving closer to that range, that 6300 flat, you can call it. Again, really doesn't matter whether it's a couple of cents or a couple of dollars above. We're roughly moving to 6300. That really is all it is for the time being. That's for today. Of course, it seems that tomorrow's session, even if it opens up with somewhat of a gap, potentially a retest of that 63.59, still does appear to be a lot more bearish. On the hourly time frame, as you can see right now, we are more bearish. We're in bear territory, and we're just about to break that 20 range on the stochastic RSI, which is far more indicative of a continuation of a downtrend. Our next levels are the same levels I've just spoke about the other day in the video, and in the community we're very well aware these are levels that were created by various external forces but represented by gaps. It's pretty simple. I shown them a couple of days ago, did this whole live. I think it was a live or a video uploaded or short, basically something I've explained and broken this down. In the community, again, it's very well known. By the way, those who don't know, there's a great discount on the sign up right now to Patreon. If you want to join Patreon and join that famous community and learn about technical analysis, actually, gain a new skill set that is data driven and not by gut feelings, right? Now is the perfect time to do so. Why? Because there's a great discount. There's this promo code that have added. Sadly, unfortunately, I know some of my already existing members asked me if they can resign and use this opportunity. Unfortunately, this is only for new signing members. Only for new signing members. It is, instead of being $30 a month, you can break it down as low as $12 a month, $24 a month instead of 60 originally. So definitely a good opportunity. The promo code, let me put it on the screen right now so you can see it as well. If it does not automatically offer you to use sort of that discount, the promo code is BD50, BD50, okay, on patreon.com/investory. By the way, welcome to all the new members who have already joined. Now, let's go back to the chart real quick, because I still want to finish a couple of things here. Now, where have we been? We've been, as I've said, I've just made this sort of a little video talking about how the gap was closed. And in essence, we will see how the price action will continue moving lower and lower over time. Right now, it is more or less moving within the framework of the very same resistance that I've just mentioned. the price action is not really ready to break down. But overall, this, what I was trying to highlight, is that sooner or later within the following sessions, we're probably going to see far more or less downwards pressure rather than moving sideways. Really, all along, that's what I was trying to say earlier. If you're going to be attentive, really the price action has been moving sideways. It does appear, if you hyper focus on what you see on the chart, on sort of this, if you really zoom in and you hyper focus on a daily basis, yeah, it feels like you've been moving upside within the last couple of days. Hi, Danny. And now we've been moving downwards. Danny, don't worry, we're going to be doing something in the community soon, just as I'm going to be finishing this live. Roughly in about 20 minutes, you have the announcement on the Discord. Can catch the live, but all right, I gotcha. See you later. See you later, Danny. So overall, we've been moving sideways. We haven't really been doing anything. No worries, Danny. It's mostly this is an unprompted live. Nobody was expecting this. I'm just putting it out there so people can watch it later. So no worries at all. So yeah, what are we seeing on the 4 hours? On the 4 hours, we are, hey Ellen, we are curving and becoming a lot more bearish. As you can see, we're seeing convergence between the K and the D. As always, once we have convergence, we subsequently have divergence. Once we diverge, we will see the bearish momentum take over, or rather a lack and loss of bullish momentum, subsequently leading to a drop below the 20. A drop below the 20 leads up to a far more bearish price action. As you know, looking at the position and location where we are, given the channels, we already are at the bottom of the channel. So it's very unlikely that we're going to be testing any higher. Rather, far more probable that we're going to be testing lower into this sort of formation that we got. Almost wedge-like and triangle-like formation, given the gaps, recent support and resistance that will function as such, and the channel that is crossing basically right through them. We're going to have this almost triangle-like formation, but for us it's this wedge-like formation. Potentially we're going to get locked into and retest, potentially just wasting more time before ending up in the closure of the gap we had right here below. And it's far more likely that we're going to see a closure of this gap probably within the following sessions. It may take all the way into next week. Don't forget we have CPI on the 12th, and so on the 12th we may see actually quite a significant drop. Okay, give me a sec. I'm just going to get rid of this. It's really annoying. All right, now let's see, what are we looking on the weekly? On the weekly, we haven't really changed anything yet. We are sort of inching closer to that 80 range, moving into the body of the stochastic, basically giving us more or less stable downwards pressure, but nothing significant yet. Of course, as we inch towards the 50, hey Casey, we will see the price action deteriorate and become even more bearish, potentially an indication of a beginning of a movement to the bottom of this channel right now, because what we've been doing all along, as you guys can see right now, there is a channel right here. There's the resistance, that's the ceiling. We've been testing the median all along, and so as it seems right now, we are preparing for a downtrend to retest that bottom again, given how our momentum is more bearish than bullish. Yeah, it is quite a useless day. I mean, that is the thing. People who follow objectively and understand what the price action has really given us today. Let's clean this crap up real quick so we can see what it is that I'm talking about. Again, so if we're gonna look, let's pretend you fell into a coma, right? Literally a couple of days ago. Let's pretend somewhere around here. And right now you woke up. You are basically $10 away. That's the difference you see. And realistically speaking, this is not a new high. This is a retest of the very same resistance that is diagonal and the very same resistance we have right above it. Just kind of an inevitability. So really all the price action was doing was moving sideways within a range of, let's call it what, $150, up and down, up and down, up and down, and really achieving nothing. So, in other words, wasting time. Those of you, some of us know in the community, using technical analysis, you can actually trade. You can day trade, and we have very successful day traders, some of whom make six-figure returns on a monthly basis, believe it or not. So we have really, really nice um, day trader, capable day traders in the community, given the use of technical analysis tools, given technical analysis's ability to provide predictive uh, abilities, if you will, of course, to a limited range and not really trying to time the market as much as identify major support and resistance levels, understanding how the momentum works, and all these various functions which we talk about in the community and guide the premise of day trading and smart swing trading. Also, people oftentimes misunderstand how important this is for investors because technical trading or technical analysis rather highlights the nature of cyclicality in the market that oftentimes investors are missing out on and don't understand. In their mind, you can just throw money at the market, and eventually, when you're going to be ready to retire, everything is going to be fine and the market will be flourishing. Well, boo-hoo, unfortunately, if you look into history, you're going to find out that when big waves of retirement happened, right before that, inconveniently or conveniently, whoever you are, depends on who you are, the market and these various 401ks and whatever retirement funds have crashed simply because of the correlation with the market. And you can call it a coincidence or not. And so retirement is not secured simply because you throw money at the market, even on a consistent basis. You really need to understand the cyclicality. And sometimes, very unfortunately, you will plan to retire exactly as the market plans, or by coincidence, if you want to call it as such, breaks down, right? So, but because that's the reality, you can look at history and find out that that has 90% of the time has been the case. Hello, hello, hi, Christoph. Good to see you, my brother from another mother. Christoph here. He's in lots of ways is the backbone of our Discord. Back a while back when Discord just was formed, and I had no admins. Christoph here was the only admin to take care of the community and help me out and be my right hand man or left hand man, whatever you want to call it, a true brother from another mother. Christoph, thank you very much for being there always. You are an absolute legend. So yeah, the price action, as Ellen here was highlighting, is really boring and really haven't done anything. We've been mainly been moving sideways. And given the analysis we see right now, it's far more likely, actually, just the other day we spoke about this in the community. I think it was yesterday, Alan, that we spoke about this, that it's far more likely for us to see a movement towards the closure of this gap within the following sessions. I think just yesterday I said it may take a couple of sessions, so here it is. Leonard, good to see you. Good to see you. Hi, Leonard. So yeah, that's kind of where we're at right now in terms of the S&P, where it appears to be that we're far more likely, pardon me, sorry, far more likely to move to the downside right now, as far as it seems we are curving on larger time frames and starting to break and form, or rather lose our momentum very, very rapidly, it seems. Moving into this sideways sort of downwards channel, more so retesting sideways, like we said before, transitioning into that downwards channel, if you will. It appears to be that it's happening on most time frames, as you can understand. On the larger ones, it has far more importance and carries a lot more meaning. But overall, we may see a couple of tame days right before we get into the 12th, on which we're going to get our CPI report, and we'll get an idea of where inflation is headed, although we all understand these numbers are utter bullshit and are not representative of what really is going on. As I was just telling someone who approached me and we were talking about something inflation related, and I was saying that although he was asking about the manipulated numbers, and I was saying that you need to know the lie in order to be able to see the truth through it. So they do need to try and lie to us so we can see how bad things really are and deduct sort of where we're going with it. So realistically speaking, I know the numbers are borderline fake or manipulated or presented in such a way that things will seem a lot better than they are, but they're actually pretty bad. We can feel it in our pockets, on our shopping carts. You say to the downside, would this be in a large volume or small volume? it's I can't really tell you about the volume. You see, you can move the market very rapidly even when using relatively smaller volume, depending on the volume throughout the day, and you can then move the market more with a smaller amount of volume rather than larger amount of volume. But given the structure and the direction, I would say for that we will need a significant amount of volume, significant amount of selling indeed, and of course, still can be achieved through smaller amounts, but still far more probable to tug more of on the swifter side. But again, right now we're not looking anywhere further than the closure of the gap right here, Leonard. We're looking at roughly around 62.50 range, if you will, because we still have a leftover gap from 62.75, 62.50, and the momentum appears to be right now kind of tugging towards that area, given that we're probably going to reach that these support and resistance levels, as I've mentioned before, from, well, arguably from the gaps. Again, gaps oftentimes don't really formulate real strong support resistance levels as much as they themselves get entangled with pre-existent support and resistance levels that are derivatives from far stronger factors or deductions from the, well, proper tools, if you will. And so these are almost far more important than what they are presented as, if you will. And so subsequently we treat them as, gap support and resistance levels. So if we're going to make it here, given just, a tiny bit amount of slippage, given the low of the channel, given the momentum, we're easily going to reach that 62.40, whatever, closing that gap, no problem. So kind of the direction is understood. No one says it's going to be, straightforward. As everyone here knows, it may be kind of an annoying back and forth process, but it appears to be that overall in the grand scheme of things, and it, yes, may be actually pretty swift, pretty rapid, on a very steep downwards sort of action. Yes, it may be the case, but it appears to be that, again, within the following sessions, we're going to see exactly how it plays out. I would say that it's going to be at first very slow and then potentially just a quick drop. Hello, nannies. What did I miss there? Indeed, the mama is in the house. Alrighty. So that's it. That is kind of what I wanted to go live and talk about, because everybody's going bananas of the end of the world is coming. Really, the mature people here in the community, or rather the community, given the nature of the maturity, in the of the people basically in the community, we understand that this is nothing. This is just noise. We're far more prepared to see something more significant that may take pardon me, for us to wait all the way to the 12. Give me 1 second to clear my throat. Yeah, sorry for that. Seems I'm having some throat issues today. But yeah, it appears to be that on a larger scale of things, we are moving towards that convergence of forces. It just may take a little longer, potentially all the way to the 12, as we said, or maybe even longer, but it appears to be that we are seeing more and more signs that the market is becoming more and more bearish. Of course, it's a very slow, tedious process, as you can see, given the quarterly structure right now. In fact, we're barely feeling that transition simply because we're doing it at the ceiling where the 80 range is. So it is like going to heaven through hell, if you will. Yeah, that is it, boys and girls. Again, I will remind those who don't know, there is a great discount you can really get right now if you're a new member. Here it is. Use the Patreon. Go to patreon.com/investory BD50. That is the promo code, and that will give you a significant discount, 50% in fact. Let me show you on the screen right now. I'm gonna hide this thing, right? Here you go. Now, instead of $60 and $30, both tiers, you can get them for $12 or $24. For the already existent members, some of you reached out to me and asked me, Can you sign up? No, unfortunately, it's only for new members only, but I am trying to figure out a way to do a promo for you all as well, and maybe gift out some memberships and all sorts of cool stuff. So I'm working on it, boys and girls. I've just yesterday or the other day discovered that I'm having an issue with this, so I didn't know. Forgive me for that. But I will, once sorted out, I will announce on the Discord, so you'll be able to take advantage of that new package that I'll make for you. Alrighty, boys and girls, love you all. I'll try to do something tomorrow, maybe another live. Today was unprompt, I know, but I thought it was going to be really awesome if I'll do something at least something, a little something. Alrighty, love you.